Hey there, welcome to the Home Loan Approval Guide channel. My name is Christina, and on this channel, we talk about tips, tricks, and then some commentary on how to get through the home loan approval process simply and without a lot of stress. And I, of course, am a former realtor and mortgage loan officer, just sharing my experience and expertise in this area. So, with that being said, on today's video, we're going to talk about mortgage approval after bankruptcy, okay? And what steps you need to take to have the most success. All right, so let's get right into what you need to do if you file bankruptcy, you're going to file it, what you should be doing to prepare yourself to get mortgage loan approval after that, okay? All right, so we're going to go start with Chapter 7 bankruptcy, which is considered the liquidation bankruptcy. Basically, with this type of bankruptcy, most of your debts are canceled. I know there are income limits or tests that you have to pass in order to even be eligible to file this type of bankruptcy protection. But this one also, because it's almost like a fresh start, there are more steps you need to take to prepare yourself after filing this type of bankruptcy. We're going to talk about after you get discharged, after the bankruptcy is discharged. And discharge just means that everything has been finalized. So you filed and the bankruptcy court has approved your application for bankruptcy protection or Chapter 7 bankruptcy protection. So after you have completed the filing and you've been discharged, the one thing you need to understand is that your credit report does not get updated automatically. The only thing that happens or that will change is your credit report will reflect a public record showing that you had a bankruptcy filing. So that's important for you to understand. And so this is why with this one, you definitely need to take some extra steps after getting discharged. Now, dealing with your credit after discharge. Okay, first things first, you need to make sure you have your discharge paperwork, right? So the document from the courts, the trustee, after your bankruptcy was discharged. Make sure you have that copy. Keep a digital copy, sure, but also keep several hard copies, printed copies, because it's going to be important in your next steps. Now, the next thing you would want to do is get a copy of your credit report. Okay, now with that discharge document, going back to that, your discharge document is going to show every creditor that was included in your bankruptcy. That's going to be super important with getting your credit report because you're going to need to review the creditors in the bankruptcy filing against your credit report. And you can, of course, go to annualcreditreport.com, get a free report. That site is a government mandated site where you can pull your credit for free. So now the next thing you'll need to do working with your discharge document and your credit report is send a letter, a written notice through the mail, right? Not electronically, through the mail to each credit bureau, Equifax, TransUnion, and Experian. You need to let them know, hey, I've had a bankruptcy filing. These accounts have been included in the bankruptcy. Because back to what I said before, those accounts will not be updated automatically. They won't. They will not. So you need to make sure that you get each one of those accounts updated. Okay. Now, let's get back to or get on to restoring your credit and what you need to do. So you're going to be establishing new accounts, but also new habits. So in reestablishing your credit, understand when it comes to trying to get a mortgage approval after bankruptcy, time is of the essence because you do have to wait 2 years after discharge to be able to get approved by most lenders. Okay, so you want to spend the initial part right after you get discharged. You want to take that time to, as quickly as possible, go through and getting everything cleaned up and then reestablished. So if you have any debts that were reaffirmed, which means that any debts before the bankruptcy that you kept and agreed to continue to pay is what will be considered a reaffirmed debt. For example, if you had an auto loan, you still need your car to get back and forth for employment, and you said, I want to keep my auto loan, and the bankruptcy court agreed, that would be a reaffirmed debt. So you want to make sure any debts that are reaffirmed is you continue to make the payments and stay current, because they're going to help your credit in reestablishing your credit. All right, so we want to talk about trade lines or mix of credit, right? So because you're pretty much getting a fresh start after a Chapter 7, you're going to need to reestablish loans, credit cards, lines of credit. So if you have a loan already, or whether you don't, maybe you get a loan, get a credit card. Now, another thing with these trade lines and mix of credit as you're reestablishing, you will have to accept higher interest rates, maybe even secured credit. And that's okay, because the point is you're trying to rebuild. So maybe you get a credit card that if it starts off secured, that's fine. Maybe it can transition into an unsecured. Look into things like that. But you want to get a good mix of credit, and I would recommend having at least 3 trade lines, right? A loan, a credit card, line of credit, maybe 2 credit cards and a loan. Don't overdo it, but you want to just have a good mix of credit. I would say at least 3 trade lines, just for the sake of the point of reestablishing and rebuilding your credit. And then you want to really focus on maintaining, right, good payment history and good debt to limit ratios. So in the instance of a credit card or a line of credit, let's say you have $1,000 credit line, it's a good rule of thumb to only use 10 to 30% of that credit limit. So that would be $100 to $300. You don't want your credit card to report monthly using more than that amount. So that's what good debt to limit ratio is. If you use more, you want to make sure you pay it down before it reports to the credit bureau. So that's really super important as you're reestablishing and you're trying to build up good credit. All right. Now, last but not least, budget is the key, right? You want to manage your income and your expenses. That's what's going to ultimately aid you in being able to not just reestablish your credit, but be able to maintain good credit while you're going through the 2-year wait before you can get a mortgage approval. All right. All right. So now we're going to go on to Chapter 13, bankruptcy filing, which is totally different than the Chapter 7. And this is called a wage earners plan, where basically Chapter 13 is almost like a debt settlement, or using a debt settlement agency where they negotiate your debts and you pay back a certain amount per month. That's basically what the Chapter 13 is, except you have the protection, the government protection basically, that's backing you as well. So with the wage earner plan, you will be paying a monthly payment every month until you pay it back over a 3 to 5 year period. So when it comes to credit with the Chapter 13 bankruptcy, it's a little bit different how you're going to be able to improve your credit while you're in a Chapter 13, right? Because again, you're in a 3 to 5 year plan where you have to follow certain rules and regulations during that time frame. So the difference with the Chapter 13 as far as a mortgage approval is, number one, you only have to wait a year, really, after filing, not discharge, but filing. So if you filed the bankruptcy protection plan, they approved you for the wage earners plan, and you pay monthly. Once you've paid into that plan for a year, technically you would be eligible to apply for a mortgage. Now, the catch with that is you have to get permission. The trustee has to approve any new credit while you're in that bankruptcy protection payment plan. So that's the key there, right? So you also would need to find lenders who are willing to approve you for a mortgage while you're in the midst of the payment plan or the repayment plan for your bankruptcy protection plan. So that's important to know as well. During your bankruptcy repayment plan, you need to make sure your income, your expenses are in order, your savings and reserves and all of that. I would say that seeing as though you first have to get trustee permission to even apply for a mortgage while you're going through the bankruptcy, you definitely want to make sure your I's are dotted and your T's are crossed, because you're probably going to be under a little more scrutiny from the trustee and then the lender to get you to getting approved. Okay. So in summary, let's go over this again. What's needed for Chapter 7 to get you mortgage approved? You're going to first have to clean up your credit report, because again, they do not automatically update your creditor files. And what that really means is that once you file for bankruptcy, even though it will show you have a bankruptcy on your credit report, those individual creditors are not going to update your accounts. So they'll just, if you don't update them, they will just show as delinquent accounts if you don't ask that the credit bureau update to show they're included in bankruptcy. So that's number one. Secondly, you're going to go through the process to start reestablishing credit, maintaining good payment history, good debt to limit ratios on your loans and on your credit cards and lines of credit, right? You're going to practice good budget management, which is going to help you with good payment history and debt to limit ratios. And in 2 years after discharge, you would be eligible to apply for a mortgage. And if you've done those things, you should be in a good position to get the mortgage approval. Now, with the Chapter 13, again, it's very different. You're in a repayment plan with this particular bankruptcy filing. So while you're in that bankruptcy plan, anything you do needs trustee approval, including applying for a mortgage. And so you also, of course, would need a lender to approve you to get a mortgage while you're in the bankruptcy protection plan. And then again, it's a little different than Chapter 7. You can actually apply for a mortgage a year after you've gone into your bankruptcy plan. So once you've been in the plan for a year, you can apply for a mortgage. So that's a little bit different than the Chapter 7. But again, you just want to make sure you have your finances in order. All right. I hope these tips, these steps, they made sense for you to help you get a plan, get your finances in order. If you found yourself having to file bankruptcy, if you're currently going through that process, but you still know you want to buy a home, these are the practical steps you need to take to make sure that you can get that mortgage approval on the other side of it. All right. So that's it for this video. Thank you for listening and watching. Please like, comment, share, subscribe with anyone who needs this information, and I'll see you on the next video.